The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, the koala bear of Wall Street. Yes, just a big teddy bear here on April 17th as we go into a 3-day weekend, and we see the markets gently up about 5 points on the S&P cash. Volume just under 2 billion shares on the consolidated New York Stock Exchange tape as we start the day. And an interesting day, to say the least. We've got so many cross currents in this market, and we've got a few things to say about it. Had an extra big edition of the Tech Insider that went out today. So if you are a subscriber, you might want to check that out. A lot of news this week I thought was applicable. I can't even say it today. And it is going to be interesting. We're going to see a lot of movement. We had a very nice bounce this week. Had a few things going on. Of course, options expiration today. And we had a big IPO to get out the door to open the way for Alibaba IPO. That was expertly gamed today and set up to impress the people, but we're going to talk about that in a minute. As always, we'd like to start off the day with a little bit of history. Today, did I get it right? No, I don't think I did. I must have missed the history today. I forgot to write it down. But you can always wing it, as they say. What do we see? Oh, that's why I was getting ready to write about it. Today, in financial history, is the first day that CNBC broadcasts in 1989. And sometimes good, sometimes bad. Effect in the market, but certainly they've had one. We've seen a lot of commentators come and go. None of them can actually put their own money to work. That would, of course, be a conflict of interest. But at the same time, they don't know what it is to actually trade. So they have to go to a great deal of people that have mixed motivations for telling the truth. And this morning in the daily newsletter, The Path of Least Resistance, I talked about and how we have to look at news coming out from things like CNBC or Bloomberg. Mostly CNBC. Bloomberg tends to be kind of Joe Friday. Just the facts, ma'am. Not very exciting. A lot more standardized kind of news. I haven't even seen Fox Business News yet. It's not available on my system. It's not compatible with my system. Anyway, don't have that. So I can't really tell you. I know they've got a pretty good guy in Charlie Gasparino running the show over there. But I imagine we'll get it here free. But I'm not paying for it. I get Bloomberg for free and at least in my package. And why should I be paying for Fox Business News? I think we've got plenty out there. But we did see that. And what else do we have? That's pretty much it for the news, or for the histoire as we start the day. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. And we've got a lot of stuff going on here. And even some questions that I've been emailing Andy today about how they will affect our markets. So he will be on after the show. I may even give him a call and ask him how some of these things that I'm seeing out here going into this long weekend will play out. Anyway, we were talking about Weibo, the IPO coming out this morning. This is kind of the Twitter of China. And I'm kind of amazed that we're now seeing these stocks come out with no books, and the SEC's not really doing anything about it. I called them twice this week. and their affairs division, they would not respond. And the question is, since these IPOs do not have the same scrutiny as the IPOs here in America, why is that? Why do Chinese companies get to skate when U.S. companies have to fork over their books? And everybody's pretty much avoiding it. Maybe they're gone this week. Maybe I'll hear something next week. My guess is no. That somewhere along the way, someone talked somebody in the SEC to looking the other way. Why these companies, China is just going to go somewhere else. They'll go to the Australian stock market, or they'll go to the London stock market. If we want these big companies here and working on the New York Stock Exchange or the NASDAQ, we're going to have to bow to what the Chinese want. And to me, there's a reason, and it doesn't have anything to do with the military, that we're not going to get accurate books on any of these. I've kind of thought of one way of actually working this, and that is I'm probably going to own each of these stocks that come out for about one day. And when they all blow up in everybody's faces, I'm going to be part of the lawsuits that indelibly will come in this market. And, of course, I'll be able to say, yes, I own that stock. And, of course, the people on Wall Street didn't give me fair warning as to the risks in it. I won't have lost any money, but since some of these lawsuits before, I get all the paperwork and, I get 50 or $100 back and don't really have to prove anything other than I own the stock. So maybe this is my opportunity to get back at some of these guys, because this thing's going to end up in court when the books tend to be phony. And yesterday we talked about Cendant, a lot of these other stocks that blew up right before the height of the dot-com phase, and I can't see a company that you can't see the book not blowing up. The temptations probably to lie are probably unsurmountable, and if you can't have justifiable bookkeepers in it, I think we're going to see the exact same thing we saw before, which is these bookkeeping accounting companies blow up, come out under a new name, and then act like they didn't know anybody before the last time they conned everybody out of the money. But one thing's probably for sure is that everybody that are pushing these out are probably going to be on the hook a later day. Probably won't get a whole lot, but I'll be in the pool. I'll be in those people that own the stock for one day, just enough to get that $100 to $200 later one day. It'll be kind of like those rebate checks you get in the mail. But just one thought. Anyway, Weibo claims to have 130 million active users, although academic studies suggest that most of the site's content is generated by a small minority of the users, which is about 30 million. It lost 48 million in the first quarter, about double what it lost the same period last year. Weibo generated 183 million in revenue in 2013, but there's concern that it's past its peak. Concerned? No one's concerned. Push that paper out. Wall Street is in the job of getting cash by hook or crook, and why it's up today, it's back up to $22. This was a stock that they couldn't get anybody to buy last night at 21. And they dropped the price to 17. And, of course, the first thing they do go out there is restrict the amount of stock that can be sold. And now they're running it, and everybody, this has got to be a great company. I had a great first day out here. Everybody should yell and cheer. Unfortunately, I've seen this movie before, and I know how it ends. I've warned people about stocks like Angie's List, never made any money. We've had some other ones, Groupon. I am going to sound the alarm, and I don't have my alarm up here. Maybe I'll alarm when we come back, but I'll play at least some kind of alarm on Weibo and all the rest of these Chinese stocks. To me, if you don't see the book, you've got to bet it's a scam. I'll be looking at these on the short side one day and figure out that they'll come back down to some level. I don't know if the Chinese Chicoms will take over and leave everybody penniless. I don't know if it's a giant tower of cards that no one knows what's going on, but it stinks. It stinks like fish on the dock after about 3 days. And nothing new under the sun. But I think we have a Wall Street that is emboldened to bring stocks out with extremely, extremely dubious underpinnings. We've got other things going on here today. Walmart is coming out with a thing called Walmart to Walmart. It allows for money transfer between the company's 4,000 stores across the United States. You'll be able to transfer up to $1,000, and it's kind of hitting two companies: MoneyGram, MGI, Western Union. We'll look at MoneyGram when we start looking at charts, but both I think Western Union was down 50 cents. I think it's like a $15 stock. MoneyGram was down about $3 earlier today, something like that, on a $18 stock. So a pretty big hit for markets not moving extremely far today. But we do see Walmart going after some of this business and them starting to take a hit. The problem is how many locations you have. Western Union has less than the 4,000 U.S. Walmart stores. MoneyGram a whole lot less, probably why it's being hit before. But also the fees are going to be extremely less. You could pay as much as $76 for MoneyGram or Western Union to send just under $1,000. And of course, this is going to be less than $10. Pretty much probably cutting the legs underneath MoneyGram and Western Union. So Walmart, a lot of these other companies like Amazon continue to prey upon the probably most bloated and expensive of stocks. I'm thinking a lot of these other companies too that charge quite a lot to send money and take care of things. Down here we have Amscot, but a lot of these money places that basically they're Vinny without the arm breakers laying around. Probably still going to see Walmart and some of these other bigger companies move into these debt cards and other utilities for people that no longer have credit at a much higher discounted rate. And of course, just about anything you do, especially on these debit cards, you have very limited liability if you issue those cards, and all the money's up front. About the worst thing you have to do is spend a lot of money for the government and them wanting to pry in and look at all of the information. Airbnb's had a lot of news this week, too. If you're not familiar with Airbnb, it stands for Air Bed and Breakfast. They are an online system that allows you to rent your home out, especially when things like the Super Bowl comes to town, other things like that. Well, they've had kind of some bumps in the road this week. When we come back, we're going to talk about how some people that rented their house out through Airbnb found out that they were owners of a brothel and some other stuff. So we're going to be talking about that when we come back. Give me a call, 877-927-6648, and we'll be looking at some stocks here in this next segment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, I had a quick mention in the den. I don't see anything in the emails, or I don't see anything on anybody calling in, but you can at 877-927-6648. We're looking at the select in the energy sector for KZ in the den. I think we're very close to a short in energy if nothing happens over this weekend. But I'm pretty much saying that I would not want to go short into this weekend or short before the last tick today. There is an old saying where you don't want to be short energy into a 3-day weekend. It used to be people would buy gold while gold was going up. Now I think we see a lot more people buying crude and other things to hold over the weekend in case the world goes to hell in a handbasket. I think we're seeing part of that today. Very light volume. Of course, we have broken out in the XLE above the $91 and 14-cent high from April 4th. And what else can you say about it? 10 million shares compared to 14. Still got a little bit of time left today. But I have a feeling that there's probably somewhere between, $10, $12 in having a problem with the Ukraine and Russia. I still think that if I was the Russians, that I have the green light to go ahead, and I would probably do something over Passover weekend if I was going to do something. So I think if we show up Monday and nothing's happened, then probably the time for the Russians to act is over. They'd probably love to get going while everybody was at church, and they continue to stir up trouble. But I would say that if I was going to be shorting crude, it would be the opening on Sunday night if nothing happened, and watch it from there. You could probably have a fairly decent setup. But a lot of this, you got 10, 12 bucks in there that would instantly go out of the way if the Russians did get out of the way. I don't think that they are going to, though. So, like I said, probably Sunday night. If you wanted to go in the futures Monday morning when you come back in, I just suspect that we're probably going to see more movement in individual stocks than we will see in these energy stocks Monday and Tuesday. Maybe by Wednesday, we'll see the energy sector ready to roll over. Right now, a lot of cash going into this sector, mostly because people are afraid to get in other parts of the sector. We're going to go through those stocks today. Anyway, we were talking about Airbnb before we left today, and it is problematic. Airbnb is a website that allows you to rent somebody's home while they're gone, maybe in San Francisco or New York. A lot of times, if you're a stewardess and you're gone for a week, you can rent out your house for $200 a night. Maybe you can pay the rent in a couple of weeks. But everybody's been up in arms because, of course, it costs somebody else money, either somebody that has a hotel or someone that has an axe to grind or the city that wants the taxes or just about everything. Airbnb did volunteer to pay hotel taxes on what they do. And, of course, the city was having none of it. It's all about how do we screw as many people as hard as possible and take their cash in the Big Apple. But what happened this week was that someone actually rented their apartment out and found out that there was a scuffle there. The cops showed up, and the place was being used as a brothel. Apparently, the person that had rented this had done it several places around the city. And, of course, someone comes back, everything's perfect, no one says anything. But this didn't quite happen. So they ended up getting all new bedding for this lady, ended up doing a lot of other things and actually renting her a hotel to go to and while they were cleaning up and disinfecting her room. I wonder if they went after it with a black light. Either way, there's always the unintended consequences with coming out with something like this. And right now we've got state senators trying to go after it in New York. This is not a public company yet, but one that is going to be trying to be public. And an interesting idea. The question is just how many downsides do you have? The state senator is now up in arms because you might find gambling establishments, other places that need to have fly-by-night locations for homes and apartments to guess would fuel illicit activities, like there aren't any in New York already. I think New York is a illicit activity. I'm just saying it is cleaner. When I first started going there, I felt like I needed to have kind of like a bath in that hand sanitizer, but it's much better there. We're going to be looking at a lot of stocks when we come back, and got a question for MJN when we come back. So we'll be looking at stocks here in the next segment. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back, and we've got a phone call, so we'll go right to Chris in the town I cannot pronounce because it's too close to the Boy Scout camp that I went to, Wisconsin. How you doing today, Chris?
Hi, Nishota.
Nishota, okay.
I have a question on ETNs such as BXX or shorting gas such as DGAZ. The safety or actually the risk exposure in terms of the SEC not regulating these?
I don't have a real problem with it. They're basically mathematical models. So as long as there's someone decent behind them to run them, not a big problem. And last time I looked, I didn't look at the other ones. What was the crude one you were looking at?
It's actually gas, DGAZ. It's a short
DGAZ. Yeah, I didn't have a real problem. They're mathematical models, and they do look at the amount of cash that those places have. So I'm not really concerned about them. They're not like an ETN, electronically traded note, that there's nothing behind them. They have to have a certain, if it is an ETF, they have to have a certain amount of reserves and everything else, and that's all set up by the SEC. I don't know of an ETN that or ETF that is blown up, unless you know of one I haven't thought of.
No, so the VXX is an ETF, not an ETN.
Can you say that symbol one more time?
Victor XX.
Oh, okay. Just wanted to make sure we're talking about the one. No, that is an ETN. Okay. So you are correct. I don't use that particular one, so I'm not familiar with it. It is an ETN. You are correct. So yeah, I would look at the ETFs, not the ETNs. You are correct about the ETNs having and being problematic.
Okay.
So yeah, I would look for the ETF of that same symbol, and or is DGAS an ETN too?
Yes, I believe it is.
Let me look it up real quick here. It is an ETN. Yeah, I would. Yeah, it's down 42 cents today. Pretty big move. Yeah, I would probably stay away at least from these and try to find something that was an ETF. Now, since those have blown up, I haven't gone and looked at these ETNs just because it's too easy to find the ETFs. I'm not exactly sure. I know that there were two of them that blew up spectacularly. I don't know and never checked to see whether the laws had changed about what they needed. Do you know any more than me on that?
Yes, one of them was TVIX.
You're right.
Blew up.
But I mean, about any chance on the laws changing on or the requirements for these ETNs changing?
Not
I haven't seen anything in the 2 years since these things blew up.
Yeah, and I'm reading a prospectus today, and it looks like nothing's really changed.
Yeah, I just didn't see anything in the news. I never went after these things. But yes, ETNs, because of their structure and because of the way that they trade, can blow up just like any of those stocks did, what, is it a year and a half, 2 years ago now?
That's right.
Yeah, I can't even remember. I never had them. I never liked them. You know, if you're trading them intraday, I guess you're okay. The question is whether or not there's anything there on the backside of these things. And they're just too unregulated for me. The DEAS, I guess, would be one that I have looked at, but I didn't go for that reason. But that is the 3X natural gas ETN. So I'll have to investigate this further to see what's happened in the last 2 years. But I would say stay away unless you do have the opportunity like you to go through the prospectus and find out what the real risks are and whether or not they even say that the real risks are in there. But maybe that's something I'll do over the long weekend. It's always a good chance to have, while I'm doing some other stuff and waiting for compiles to go through in my programs, to look at some of the stuff and check it out. So I probably will look at and take another look at the structures of the ETNs and see whether or not anything has physically changed. But to my knowledge, it's the same as yours. They have not.
Bloomberg had a story today on their news on the web that someone lost $45,000 in engineer in one of these ETNs, and that's what got me to pull out prospectus and read further.
Well, you certainly want to. The ETF structures, like I said, I can't remember in the 15 years, almost 16 years now. Well, it actually is going to be 16 years. Those ads that we have running on TFNN are old. We need to upgrade them. I think they're 3 years old if they still say I'm 13 years a trader. I can't remember any one of those going bad. I remember at least some waving the flag when these ETNs really started popping up. And I don't think, like you said, anything's changed, but I'll look at it over the week and see if there's anything new, and maybe we'll talk about it on Monday.
Great. Well, I really enjoy your show, and have a blessed Easter.
You too. And what do we have out here? We had MJN. We had a question in the den from Angie, who has nothing to do with Angie's List, by the way. I'm pretty sure. Maybe she can tell me if she doesn't. But she was asking about Mead Johnson Nutrition Company, MJN, about a possible short. And I have to say, if you were looking at this as an ABC down, I think you'd have to pull the trigger here today. Light volume back up here at the 618 retracement. Everything that you want in lighter volume. I would have liked to seen maybe the candle on the 10th with a little bit more volume down And you got what? Basically $6.80 ABC. So it's going to take you down to what, $78? If we look at this real quick, let's take a look. If that's what do we have here? So that's going to be my A, that's going to be my B, that's going to be my C. It's a small ABC, or at least smaller. But yeah, it'll take you to $78.74. That's back to the high volume day of the 19th. The problem would be that you're not going to get any more than that $79. If you're happy with that, you can't find anything better. I would think that is beautiful. Yeah. Okay. So we have that. And what else do we have? I had a few things that we were looking at. Probably talked to Andy in his hour about coffee. And I was looking about that. But we had a coffee-related stock pop up in the scans for the Gartley list. And it actually doesn't look too bad. I sent it to him last night, and I thought, probably fairly close out here for that. And I'm trying to remember what it's a JVA, was the Gartley. So maybe we'll talk about this in his hour if everything remains very quiet. But nice little Gartley pattern out here. I would have liked just a little less retracement. Basically had an 86% retracement of the B to actually the A to B leg. And you want it, I like it to be just a little weaker than that. But other than that, pretty nice. You have two dojis out here in a row. And, you would have liked to see it hit the D target at $6.56. And you got, within 8 cents of it yesterday, and pretty much back into it. But, of course, was it JO is the ETN for coffee, isn't it? Yeah, it's a coffee ETN. Nice move up today. Not a lot of volume out here. Looks like this thing is making asymmetrical pattern out here with lower highs and higher lows. So maybe going sideways out here for a while. But certainly that JVA did look interesting for Gartley's. And let's go back to that one here real quick. And just about everything I like in one. Energy on this last leg down, not very good. We're right in that gap where the volume did come up on the 14th of March with a decent volume, we're going to call it 2.9 million shares on the 14th. And so we're back right where that gap happened. And, of course, 500,000, 261,000, and 100,000. So we'll talk to Andy maybe about it in his hour out there today about coffee, because it certainly looked good, and certainly that came up. But the JO looks like it's kind of narrowing out there. Yeah, let's see what else we had. Okay. Question in the den. Do you think we're still going to sell off today? Well, I thought we were. I still thought we were. But, boy, this market's not acting like we are. So I guess it's going to prove me wrong today. And I'm wrong enough. You're never going to be 100% right in this market. But I am kind of surprised about the push back up here in the highs. But certainly, if you want a extremely bearish signal in the market, nothing like pushing up to and against new highs in the market with 2.2 billion shares as we go into the close here. That's probably going to say we're going to do about 2.7 billion shares. The question is, do you want to be short or you want to be long going into this long weekend? And to me, it would be a hard decision not to go ahead and sell a little of this off. With a light volume, though, it is going to be problematic. But I'm more than willing to keep an eye on some of these other stocks. And, for the most part, the positions I have, I like. They are not giving me indication that we aren't going to at least go back and retest those lows one more time. And, of course, another article, this is a big Andy Heck day out here, because we've been talking about and emailing him a while. I have anyway, about maybe the issues with food prices. And of course, Chipotle opened up much higher today. They came out pretty much early on. I think I'm going to say it. I didn't see exactly when this happened. But talk about a monster reversal in the stock. They basically came out and said they're going to have to raise prices. They were right back to the support line. They needed 2.1 million shares. I've got to get my Dr. Evil billion thing down. But really see CMG out here reversing on them raising their prices. And I sent that to Andy, so maybe he'll talk about it, or maybe I'll get a chance to call in before his show is over and talk about that. But monster volume down, monster reversal out here. None of these big cap stocks are acting very well, and just rising food costs are just one issue of that. But I talked about to him about that for a while. IBM, another one of these stocks that fell on off the edge of the earth. Volume really didn't look that bad. A huge short squeeze out of this thing, right back into the lower trading range from 192 back down to 171. My guess is this is about the last time that IBM can disappoint. There's only so many times you can start telling everybody how your company turns around without turning around. I think IBM may be a good buy one day. They certainly have spent some money in a few key areas, but those areas are not going to be able to replace their business. They also have Amazon cutting the prices seems like every month on the Amazon Web Service. IBM is competing against those online web service companies like Rackspace and Microsoft. Now, they're doing business in those things. It just kind of like Walmart going after those dollar places. It is and continues to be tougher and tougher to get anything else. We can take a look at it. Okay, I wanted to get to that. Let's see if there's anything else I wanted to get to. Wanted to take a quick look at Google here. And it is Google. It's back up here. It's I guess it could have been a lot worse. Maybe that's the answer out here. You needed about a $30 move up or down to beat the spread on earnings that we actually got right to that level. Probably not a big surprise to me that we did come down with fairly decent volume today. Makes me think that we're going to get down at least to that 515 level that we saw not too long ago. That's the January 27th low. But it's just going to be hard to ever beat Google down very hard, make it fall out of bed. Anyway, we come back in just a minute. Remember those tiger dollars.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And getting ready, warming up in the bullpen is Andy Hecht. Always enjoy his show. I never was much into commodities. I knew some about them. I liked gold. I liked some others. And you can, but, not an expert in it, not spend a lot of years trading them. Most of the things that I've learned still apply to trading commodities that you learn in stocks, but there's always stuff that you only learn out of time. And, of course, we're very lucky to have him out here rounding out TFNN, where we really didn't have a lot of people talking too much about commodities before he came on. And it really is nice to get a fresh perspective and at least one more thing to trade out there when the stock market maybe is not doing anything or maybe not even going our way. But we'll continue to look at it. Had a few stocks also not doing so well. We talked about this one before, and that was Mattel. Just couldn't see that there was any way around Mattel going back and testing its low back here on February 19th. Earnings out today, down decent volume out here. But to me, this thing looks like it's going to drift down around $35 to that February 19th low. And maybe it'll consolidate across the summer. And maybe one of these nice stocks to buy somewhere around September and sell, probably on Black Friday, late November, as a nice trade. But it'll be a little difficult to see. But we'll continue to look at that. Had somebody in the den talking about Google And the big gap at actually, big gap I see is between 425 and 325, something like that. Let's take a look at Google L. I don't think it's any different. Yeah, okay. Probably the big difference out here is that we see this giant gap, and the thought is that it's going to get filled. What we don't have today is the kind of volume where we have 4.7 million shares. You needed to get 515 with 4.3 million shares. You really just haven't got it yet. The closest thing still out here is the 530, and I don't see anything in that yet. Google probably going down. Are there a lot weaker stocks in the market than Google? And the answer is yes. I just don't see a company with good visibility and fairly decent prospects for not having the end of the world. IBM to me was, we talked about that over the last week, much better chance that everything goes to hell in a handbasket with IBM than it does in Google. And that's just why I would rather be short something like IBM than Google. The earnings are fairly transparent. It's almost all based on search. All these other goofy things that they talk about doing, so they spend $1 billion here or there, really didn't change the bottom line. And it doesn't look like even Bing or something else really going to do anything to hugely change their business. If the market goes down, it will go down with them. But my guess is that this will always be one of the stocks that, unless something majorly changes in the industry, which will probably be stronger than the rest of the market out here. And seeing stocks like this, somewhat problematic to think that they are going to be the weak. I actually like a lot of other stocks much better, like that MJN that we talked about earlier about. I mean, that one looks beautiful as a short. Google, not so much. Is it going to fill that gap? Probably. I just don't see it in the charts now. Anyway, you have a great and safe and wonderful weekend. Extended weekend. We'll be back on Monday, same bat channel, same bat time, and remembering and reminding you to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.